What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 97, and we are back with our favorite sporadic, or I guess regular guest now, Kathy Hall. Kathy, good morning. It is still morning over here.
Hi. Yes, thank you. Regularly sporadic. I like it. I am back, and I'm happy to be back. It's great to see you, and thank you as always for the invitation. As I'm hoping your audience knows, I am Kathy Hall, the Executive Director of Petrochemical Products for Opis, the Petrochem Wire products, which Petrochem Wire is a daily newsletter that focuses on ethylene and propylene, and we have other products that are on a weekly basis. We also work with Opis's chemical market analytics on of course, many chemicals, but our focus for your purposes are ethylene, propylene, benzene, and larger macro issues. And then we talk about the many downstream markets in a collective sense in terms of demand. But yeah, like I say, I'm always happy to be here, and it's been quite a 3 months. I think that the last time I was here, we were wondering if we were going to hit some record lows in the U.S. base pricing.
Yeah, I'm trying to think back. I should probably know this. I think this is probably our, sixth or seventh quarterly episode we've done, going on the better part of a couple of years now, which is exciting. It's been great having you on. We, some of our, despite the fact that, when the five of us are here, it's always a good episode, but I think you're by far some of our listeners' favorite guest appearances. So we always appreciate it. And yeah, it's been great kind of touching on things quarterly to see what's happening. Obviously, as we've kind of come to find out with these quarterly episodes, seems a lot can change in just 3 months. So it's always amazing. I think last time we recorded, it was a little bit quiet. It was kind of midsummer. There was not a whole lot of excitement going on. People trying to figure out when we're going to hit the bottom. And then now we've got some, I think, interesting points to touch on coming to the end of the year. So I know kind of in general, just to kick it off, you had sent a couple interesting bullet points just about, where we kind of are currently and some macroeconomic trends, with low demand weighing on prices, low inventories. What's kind of the general, you mentioned that it's been an interesting couple months. What's kind of the general trend on things happening these days in your world?
Well, I think that overall, I think about the comments that I hear from people in the industry, and it's mostly more of the same, but at the same time, a little bit grateful that it's more of the same. I don't think that this year was one of the industry's best, but it wasn't the worst. I think that a lot of people feel proud of the stability rather than volatility that we could have seen. I still think that even if in maybe another sense, getting into space and time and feelings, that we might feel as though, the times of lockdown, that was 3 years ago. When I look at price trends, and in particular the volatility, and you and I have been over this quite a lot, the things that nobody could see coming and how long they took to play out. And part of me wonders if, as far as chemical markets, in particular demand, are we still in what is maybe a major longer term correction? Because demand has really not been robust in 2023. I don't really think around the world for any chemical, but focusing on the US, I think that I don't think that anyone was forecasting for robust demand, but certainly as we, when you and I last spoke in July, for example, ethylene was down to 16 cents, and anything below 20, just looking at a 10 or 15 year trend, anything below 20 cents is, cause to look at your technicals. How low can this go? Propylene on the finished grade side, in particular, we're tracking the polymer grade, the higher quality finished grade stuff. That's that price has been above the ethylene price for for years. But that again, that dipped below the 30-cent mark, and that was again in July, going, well, what's going to happen? Particularly in July, you start to hear demand reports about the rest of the year. The year is over, that sort of thing. So it's like, so where does the fourth quarter go? Typically, though, as a lot of people know, October, you can see a little bit of a bump. That not a huge bump, but a little bit of a bump, where maybe it's a mini correction, or you're trying to plan for the rest of your year, and you do, but then you get to October going, well, I need a little just in time stuff for the next month or two, and then so you might see that little bit of a bump, a little bit of a steady market in November, and then maybe a little bit of a drop off in December, as people really, especially smaller plants, just really might reduce or shut toward the end of the year and balance the inventory. I apologize about my office mate. He's a little bit emotional this morning. Anyway, but yeah, so I do think that what we talked about in July that we could see in October, my recollection is that it's largely come true, so that we weren't expecting surprises. We didn't see surprises. So, but that said, trundling along with so-so demand and essentially low inventory. I think the low inventory part is the different part. Not that low inventories at the end of the year are, exceedingly rare, but having low inventories for much of the year is pretty rare. So that's I don't know if that's something you're also hearing in your world, Ben, that your orders are feeling a little different in terms of overall. You're through, the first three quarters going, wow, you really didn't order nearly as much as you have in the years past. But then again, what was 2022? It was a massive correction of panic building because of supply chain issues. And that's why I say it may be that we're still in a macro correction in terms of demand, or maybe that, that people have gotten used to doing more with less, and this might be something that we see for a while. But that's certainly been the feeling all year, is that kind of a fair to middling demand.
Yeah, it's been interesting. I would definitely agree with that. I think we're probably still in that correction cycle. I think things are maybe a little bit better. The beginning part of this year, I think, was obviously very slow. You heard a lot of destocking and people just working through inventory and things along those lines. But I think in our business, we've certainly seen a bit of an uptick in orders here and there that we hadn't gotten early parts of the year. And a lot of it was, hey, we need a truckload and we need it on Thursday, which is good for us. It's a strong suit of our business, having inventory and being able to supply on short notice. But you very much get back to sort of just in time deliveries. Companies don't want to have massive raw material inventories on the floor, whether it's just because of inventory volumes, or if you're worried about prices going down, or any one of those things. So I would definitely agree with that cycle and kind of where we are in things. But yeah, it's been interesting.
I was going to say, in terms of freight rates, that is something that a year ago and 2 years ago, this was a massive topic for, a good year and a half.
Sure.
I feel like freight rates are just not really a topic anymore. So that is, to me, an example of a market that has normalized to the point that we're not even talking about it. So that is, the prices are fairly competitive and not really an issue for anybody.
Yeah, and we've seen some interesting things just in the past couple days, and kind of trends that we haven't seen in the past couple of years because demand has been so crazy. But we were looking at certain lanes coming in and out of New England, and obviously as you come into the wintertime, certain of those lanes, people may want to get out of New England more so than they want to go into New England. So coming up to the Northeast to our neck of the woods could be relatively expensive, but we've seen actually a pretty significant drop in some lanes coming out of New England, because those lanes, people really want to get out of New England and are happy to compete and take those to make sure that they have a turnaround on the way out. So some of these seasonal things that make sense and have happened in years kind of before COVID, but seasonal trends and weather trends that we really haven't seen because the demand has just been so crazy. But I would agree, it's really not a conversation. If anything, it's actually a bit of a positive light with freight rates coming down a bit, which is I'm sure surprising to many.
Right. Well, I'm thinking about, just a year and a half ago, that was really all anybody was talking about.
Oh yeah.
My freight rates have tripled. My freight rates have crippled my business.
Yep.
Never mind the availability and the timing and the backlogs, and so that seems to have worked itself out. And in terms of back to normal, I know with the ethylene price is back up above 20 cents, and that's feeling a little normal. Propylene's upper 30s, lower 40s, and these are on a spot basis. But we've also got a handful of steam crackers that are in either a scheduled turnaround or something that happened during September. So the market is really, to me, trundling along in a way that even if they're my colleagues at Chemical Market Analytics estimate that operating rates for steam crackers as an aggregate is maybe in the low 80s. So that's a little bit low, but given the demand environment, that's it's keeping things fairly balanced in that sense. It's the downstream inventories, I think, that are the kind of the nuance to watch. Anytime you're in a low inventory market, you do have the potential for some volatility, price jumps for that, for that prompt product, because you can't draw from that inventory. But something I know we talked about last time that I wanted to bring up again is that the gasoline market. The gasoline market, its use of chemicals as preferred blend stocks. I know in the benzene market in particular, that really has made a difference in demand for ethyl benzene, and then of course for toluene. That depending on how cynical the person is that you're talking to in that market, I've heard more than one person say if it wasn't for gasoline, we'd have no demand at all. And talking to various people in the styrene world, I'm like, are you making ethyl benzene? They're like, of course we are. I mean, that is so when I look at the bounce back that we've seen in benzene prices, the October contract itself was up 70 cents, right? And it's broken above $4 for the first time this year. It's my understanding that the gasoline and ethyl benzene use is really, that is a significant factor in the demand side. On the supply side, as because the price had gotten to kind of a low point in the third quarter, that there was not a lot of material here from Asia, which also makes a difference. So, that's I feel as though this the price rebound in benzene itself is a true correction or reaction to we were not attracting exports from other regions, or imports rather, and also what we had, we were really not putting into the styrenics and polystyrene world because the demand is really not that supportive, but gasoline was there. So those two things have gotten that price up, and then the imports will return and then the prices will drop. That's a normal market for benzene. So I feel as though maybe a little bit of normalcy is coming back. I think that with the ethylene and propylene, again, you will have the steam crackers come back to life. In particular, a big question mark from the second quarter or third quarter also was Shell. Shell going down in May, and the speculation at the time was, will this be for the rest of the year? Well, it's October, so if it restarts during the quarter, okay. We also have some other steam crackers that could restart during the quarter, but I think a lot of these are, they're controlled enough to be cognizant of restarting at the end of the year. What kind of demand are you really restarting and running flat out for? But also in a low inventory market, you can build that inventory if that's your choice to to do at the end of the year. You're certainly not running out of storage space.
Yeah. Yeah. And I think on a macroeconomic, perspective as well, I saw some reports this week and last week, and people have talked about it on and off about just consumer spending in general. Even though rates are very high, sure, people maybe aren't buying houses, but consumer spending seems strong. I think retail, public company retail announcements for earnings are, I think, this week or next week. So those will be interesting. I mean, people are out spending money on things. Obviously, that's moved to travel and things along those lines rather than home renovations and stuff, quote unquote. But it's been interesting. People talk about inflation being high. I feel like you don't really hear about people talking about recession concerns anymore and things like that. Rates are high. They kind of are what they are. People are still spending money, which bodes well for maybe not so much inflation specifically, but bodes well for the economy. People are still out there spending money on things. And, I heard one kind of perspective that people will go out and travel and do the trips that they missed out on due to COVID. And then everyone's going to sort of come back home and say, well, now what? I mean, and look to buy things. And, as long as consumer spending and the kind of atmosphere there stays positive, I mean, people will continue spending money and buying things, which will obviously trickle down to our industry, or up to our industry, I guess.
Yeah, no, I agree. This past summer was certainly, I think, at least in the States, the summer of the family vacation. I feel like everybody I know was like in Ireland or something,
Yep.
If social media is any evidence of that, right? That, but also, I mean, you're right, that big ticket renovation really went on in the second half of 2020. That was kind of the psychological reaction to lockdown for those who could afford it.
Sure.
Obviously,
Yep.
Those who still had all their incomes intact and are looking at, I might be home for the next few months at the time, put on a new deck, redid the kitchen, beefed up a den or a game room or something. That, how many times a year you're buying a new refrigerator, right? So like there's certain types of demand that they're just not there. But to your point, people spending money that, like you say, you're done with travel, you're looking at the holidays, and there is inherent spending in some of that, and refreshing things, and
Sure.
smaller appliances or smaller improvements that you can do to the garden, and more flower pots and Christmas decorations and Halloween costumes, that there is inherent discretionary holiday specific spending that is going on. And I'm personally a fan of consumer behavior studies and things like that. And I think, as we've also discussed, I consider myself to be a very average person, in that when I look at, did I do my Christmas shopping? Not yet, but I might start this month. So my planning is beginning, so, which means that experts at the retail level probably began planning, last quarter for what I might be feeling right now, and we'll see if they're right. But that we will be seeing those retail numbers coming up as a real guide to what we're, what's going on at home, and and also what kind of picture that paints for the restocking in Q1 of next year. Because I feel like before we know it, it's the Lunar New Year holiday again. And as much as January is a reset for everybody's inventory valuations and all that, there's usually not a whole lot going on the first 6 weeks of the year, because everyone's waiting for post-Lunar New Year demand to roar up, which, we'd be in our third year of waiting for that, really.
Yep. So looking at things like oil and gas, obviously we saw a upward trend coming to the end of Q3, and then surprisingly, I think recently, especially on the oil side, prices have come off a little bit. We're kind of sitting around the mid 80s, where I know we came up to 90 to the end of September. So what are you tracking? What are your thoughts on kind of the high level, crude oil and natural gas pricing, where it sits today and coming into Q4?
Well, I do think that the headlines to watch are the oil headlines, that for chemicals. I think that in my observation over the past couple of quarters, that really cost has been the most volatile thing. And so that's that's given a certain amount of support to chemical prices around the world, meaning that, they're not dropping to the record lows that we saw. I think about, during early lockdown when there were it was almost like there were no prices for anything. And ethylene itself went to 8 cents. And that's, but crude oil was negative for a few minutes there. So, those were extraordinary times. But looking at, I know the last time you and I spoke, I believe that oil was in the 70s and now it's in the 80s. And there just might be enough geopolitical stuff happening that 90s are not,
yeah,
90s are not, an out of hand forecast. But
sure.
I feel as though those are really, we talk about, you and I have talked about, well, what are we watching in the new quarter? And something, I had said for a long time was, European natural gas. I'm not really watching that as much. I'm really watching crude oil headlines. I feel like that's that will have maybe some of the biggest shockwaves or ripple effects that we'll see. And, and typically they're not that huge of a ripple effect, but in terms of what's the support that you can see, when we talk about also with the gasoline demand really carrying stronger use of propylene, we've seen also cumene be used as a blend stock, which is highly unusual, ethyl benzene, highly unusual. So these are factors that, they're just not typical that we saw this year. I recently had the opportunity to address some plastic market consumers, and and of course they're all very smart people, but their question was, why don't we count as much as we usually do? I'm like, right, because of gasoline, So, and that, the gasoline demand is something that is really not built into a lot of downstream manufacturing for the plastics world. It's not really built into their demand forecast, especially use of cumene or ethyl benzene. So these were unusual factors that really carried ethylene, propylene, and benzene quite a long way this year. But that said, this is October. The driving season in this country or hemisphere is officially over. So now we're into winter grade gasoline, but your your home heating costs are going up and demand will be going up. And in terms of chemical feedstocks, that pulls heaviest on propane.
Yep.
So that's the most supportive for propylene costs. So, trying to mitigate that. We also have, a lot of the propylene related downstream markets like polypropylene. If their prices got to a point where they were attracting imports, we're seeing that play out, kind of the opposite of benzene, where, the price here was not attracting imports and now the price is up, and well, we'll see where the imports are coming in. So those things are, they're constantly like little wheels playing out, side by side. So the propylene related wheel is maybe gasoline's over, but heating's here. Ethylene, a little bit different. We'll see where the ethyl benzene use goes in this winter driving season, because as an unusual feedstock, we don't have a whole lot of historical data on, its use in the winter driving season. So we'll see how that plays out. And then, of course, I don't see that renewable or non-fossil feedstocks have moved the needle at all for any chemical company's costs at this point. But, it's like I say, the drums are beating louder, so don't count them out. And I think I'd mentioned this previously too, is when you look at all, we're about to get a load of everybody's third quarter earnings, right? And you might see that they've cut headcount or they've cut, I don't know, rail cars or whatever they're cutting. What they're not cutting is their sustainability departments.
Yeah.
So, that's something that's certainly here to stay. And, just be mindful of what's coming. Talk to your suppliers more deeply about what are you using, what are your plans, is your cost structure changing? Because those are also subtleties that will be, in my opinion, more specific to the company, you
Sure.
know. So
You,
it's
you,
it's going to be a while before you and I are talking about what pyrolysis oil did this month.
yeah.
You know, but talking to your supplier, that might actually change things for you.
Yeah.
But you know, that's I think that's where we're at with that personally.
You mentioned following crude oil headlines more so than European natural gas. I know for TCC's business, and I'm sure for a lot of listeners, you know, energy prices in Europe is still very much an interesting topic, just because so much of the you know esters world and what we play in is produced in Europe and falls under those you know that kind of umbrella. What are you seeing with Europe energy prices? Are you still following it, you know, closely? I know there's a lot of we hear a lot of concerns about, you know, sure, energy prices have come off a bit and they're a little bit more reasonable. Still a exponential amount over the US, but more reasonable.
Right.
But there's a lot of concerns about a cold winter and what energy prices could do. What are you seeing on the, you know, kind of Europe specific side? Or have you seen much? Are you hearing a lot of alarms being rang at this point, or just kind of a wait and see?
Well, I don't want to be an alarmist, and I do agree with you. I'm not saying, you know, European energy prices don't matter, especially in the natural gas area. You know, as you say, it's still exponentially higher than what we've got here in the States. But, you know, what are we looking at in the States? You know, we're looking at a little bit over $3. So to say something is, you know, above 10 or in the teens or 20s, that's a big deal, no doubt. But I've my personal take on what I've seen happen across Europe is a form of a structural shift. You've seen companies shut plants down. You know, you've seen decisions already get made that are really not, they're not going to be a factor for the next few quarters or years. So I think that you know, just putting an end to some unprofitable situations is something that we've seen go on throughout 2023, that this was the year of, okay, no more, you know. Yeah. That so there's that. And then, you know, on the world front, if you're looking at demand, I think that, you know, demand, just like in other regions, is not all that robust, but it's also you know, it's really better matched to supply than it was a year ago because there's less supply for certain products. So that's, I think that you know, I'm continuing to watch and listen, especially in earnings calls for global companies. What is their Europe strategy? Is it more closures? Is it closing a manufacturing site to make it more competitive cost-wise? You know, I'm not, for example, and I don't know anybody doing this, but if a company says, yeah, we're shutting this plant for 2 years, when it comes back, it will have no fossil anything, you know, no electricity, no anything related to, okay, maybe that's resulting in certain incentives that are making that plant extremely profitable. And then the products, everything at the site, including the fuels and everything, will be of this, you know, more desirable quality. Are they able to secure contracts to sell this? So that's the sort of thing where I'm like, I'm looking more for what's ahead in Europe in terms of company strategy. So I guess maybe similar to what I was saying about renewable feedstocks or energy, I feel as though we're in a case by case scenario where I can't make any sweeping statements about the region, but I can certainly look at some companies saying, okay, that's what they're doing, and that's a big deal. And that's a big deal for this country, and that country is a big deal to the region, that it kind of spokes out from that, if that makes sense. I think we will certainly continue watching all of that. There's a lot of very interesting partnerships going on in the plastic space and recycled space and fossil-free space, and credit space in Europe in particular. And I think that's because their traditional cost structure has been possibly the most challenging on earth.
Yep, absolutely. Yeah, something we're keeping a close eye on, you know, remains a big question mark. Obviously, you know, we see a lot of it here in the U.S. You know, we were at the EPCA in Vienna last week, and a lot of interest in folks talking to us because the U.S. still seems to be doing quite well compared to the rest of the world, and we've seen producers and competition in the U.S. that we haven't seen prior because people are just looking to obviously keep plants running and move material, and folks are very competitive on pricing and a lot of things. So I think produce in Europe seems to be at a slight disadvantage because it is higher cost to produce. So be interesting to see, like you said, what companies do and the strategies they take to remain competitive or become competitive, or maybe make modifications for the future. It'll be interesting. You made a couple notes just about what you're watching and what's to come. So as we always do, what are you keeping a close eye on for Q4? I know you mentioned the crude headlines. You mentioned maybe some people a little bit on the bullish side of things in some industries. So what are you keeping a close eye on as we come to an end for the year here?
Yeah, I mean, I think in general, you're always hard pressed to find companies out there saying we're not expecting a good quarter, But yeah, I mean, certainly, I feel as though I'm watching more companies than larger market trends. Global energy trends are the big one. And then, of course, we're always watching what ethylene, propylene, and benzene are doing in the regions. But it seems to me like right now, the current prices and even the forecast prices, things are very close. Not to say, that they're all at parity, but if in benzene, the U.S. is the highest price, not by much, but it is the highest price. And we'll see it's almost like a jockeying in those markets, who is the highest price. When it comes to ethylene, it's, it's always the U.S. But, that really speaks more to the demand. But I feel as though the things that I'm watching, in addition to macro energy and of course, interest rates and to your point, consumer spending, not like, I mean, I've always watched consumer spending, but I feel as though in times of more uncertainty about demand, the consumer spending takes a more prominent role in what I'm watching. And also, like you say, the interest rates and all of that, but also the companies themselves, who's emerging as a leader in that, in the 2024 market with the decisions that they're making that will have global ramifications. So that's really, I'll be watching companies closer than I have in a while.
Yeah, it's going to be an interesting end of the year, I think, for sure. I think there's a lot of people, planning for the end of the year and end of year inventories, but also really starting to look to next year and figure out, okay, is it going to be, earlier in the spring? Is it going to be later on in the year for any real demand to pick back up? Is this just kind of what new normal demand looks like? And maybe it'll be a single digit percentage over what, 2022 or 2023 had. So yeah, it'll be interesting to kind of hear what folks talk about. Obviously, this kind of time of year comes up with a lot of contract negotiations and things like that, especially on our side, just for annual agreements we have with customers and suppliers. And it's a good opportunity for, to get kind of insights with these companies on what are you guys saying internally? What does your forecast look like? Is it the same as this year? Great. Is it any percentage higher or lower for next year? Are there certain products that are going to be doing better or worse than others? It's certainly an interesting time of year for all that, to get a lot of insights on what people are thinking about for next year. Granted, typically all these forecasts are completely incorrect. And as we come to find out, you really can't predict any of this stuff, but it's interesting just to kind of get a feel for companies' moods and mindsets and what people think about for the year to come.
Well, I think what you and I discussed in July was more of the same, in terms of a forecast. Stability, maybe a pop here or there, nothing falling dramatically, because where we were at, how much more dramatically could you fall? And I feel like that's a little bit of the indication that we've seen on the forecast side, accepting world energy, world oil prices, just probably while we're speaking, there's more and more rolling out because of world events of, what things could mean for the next few months. But apart from the price of oil itself, I think that a lot of the basic chemical expectations are more of the same. Keep doing as well as you can with what you've got, and not a lot of surprises. I don't think anybody, I mean, whoever plans for a surprise, but that, there's not a lot of volatility conditions that appear to be on the horizon. So they would be a true surprise. That said, every January brings the threat of an ice storm to the Gulf, that sort of a thing. We made it through hurricane season with very little effect. And that's sort of a feeling.
Yeah. Yeah, no, I think it's a great way to kind of wrap it up and talk about folks' mood for next year. Like you said, just kind of keep on going. Maybe there'll be an uptick in some certain markets, but otherwise, that kind of seems to be the general theme, is just this is kind of where we are and what we're working with, and barring any significant unexpected events, it's kind of just the market we're working with for the early part of next year.
Yeah. Well, I will see you again in the new year and we'll compare notes again.
Yeah, as always. Well, maybe we'll see you here in January, although more than likely it'll be another virtual one. No one would blame you for not wanting to leave your house in the middle of January. I know I'm certainly on that boat. I get it, but we'll see you here sometime in person again soon. And as always, we appreciate your insights and thoughts on what's going on in the world of energies and its derivatives. It's always a great conversation. I know it's well received with all of our listeners, both internal and external. So we appreciate it as always.
Oh, well, thank you. And thank you, listeners.
Absolutely. We'll talk to you soon, Kathy. Thanks so much.
Okay. Thank you. Bye-bye.
The material contained on this podcast is provided by the chemical company solely for informational purposes. The information is not guaranteed to be correct, complete, or up to date. The information in the podcast is intended solely as a general education aid. TCC is providing this podcast as a public service, but it is neither a legal interpretation nor a statement of TCC policy. Reference to any specific product or entity does not constitute an endorsement or recommendation by TCC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Views and opinions expressed by TCC employees are those of the employees and do not necessarily reflect the view of TCC or any of its officials. All statements, comments, and opinions presented are made in the context of robust dialogue and freedom of expression. TCC assumes no responsibility for any consequence relating directly or indirectly to any action or inaction taken based on the information in this podcast. While TCC strives to keep the information in the podcast accurate, complete, and up to date, we cannot guarantee and will not be responsible for any damage or loss related to the accuracy, completeness, or timeliness of the information. TCC assumes no liability for any errors or omissions in the content of this podcast. The information contained on the podcast is provided entirely on an as-is basis with no guarantees of completeness, accuracy, usefulness, or timeliness. Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.